Good morning, ladies and gentlemen. I, CA Aditi Shauche, warmly welcome all of you to the technical session 1 of day 2 of this 2 days virtual sub-regional conference organized by WIRC of ICAI, hosted by Vadodara branch. It's so wonderful to see you all here on GoToWebinar. In current scenario of corona pandemic, physical presence is very difficult, but I would like to thank the WIRC of ICAI and the technology like GoToWebinar that provide a platform where we can meet and get updated. With this, I would like to invite Regional Council Member CA Vikas Jain to give opening remarks.
Thank you very much, Aditi. A very good morning to one and all present over here today on this online platform, virtual reading, I would say. So Baroda is always known for the hospitality. So we always enjoy coming to Baroda and having the conferences in person. But unfortunately, the pandemic has changed entire these things. And now we have to settle with this online virtual these programs only. But we hope that in the times to come or very soon the vaccine comes and we all would be able to once again meet and greet each other, not only learning, along with that we also would be having the kind of networking that is very much required in the profession today. So yes, that is very much important, and that is the thing we are missing as of now. But the best part about this is, yes, we are getting the best of the speakers on the click of the button. So they are available. They do not have to care about the traveling and all these things. So the scheduling and availability is comparatively better. So that is the best part. So every system has some pros and cons. So I must congratulate Baroda branch for arranging this wonderful, hosting this wonderful sub-regional conference. And I must congratulate Kunal Bhai, the chairman of Baroda branch, along with his team. They have been doing a phenomenal work in the last entire year, and in the starting of the pandemic also, may it be the social service, may it be on the learning side. He has been doing excellently well along with the team. I also congratulate the local council member Vishal Bhai Doshi. So he has been everybody knows that the way he works. So yes, he has been also instrumental behind this conference, and at the same time all my council colleagues, including our chairman Lalit Bhai Bajaj, because the conference that is being hosted by Baroda and organized by WIRC. So Lalit Bhai is always a man of action. He is taking great initiatives, and the topics that has been selected for this conference are, I would say, superb. And the first topic today, that is on evaluation and insolvency. The speaker for us today, Sumit Dhadda ji, a well-known speaker, and we have been interacting just before the start of the conference about the future of the profession and about these things, the valuation and insolvency. So I must say that valuation and insolvency, both of these fields are the buzzing field and the most upcoming and most promising segment, I would say, in our chartered accountancy practice, because I have been doing this insolvency for the last 3 years, and I see that this is one of the most remunerative practice, and valuation also is alike. But the only thing is, we professionals, we need to keep our professionalism on the higher side. We need to enhance our skill and knowledge. That is most important. If we do not have the skill set and the knowledge, and simply copy paste kind of practice that is being followed, then the problem would be thrown out of the profession, because now some external threats, external competitions, everything is also coming up in the profession. Earlier, the valuation, the financial assets especially, was the pure domain of the chartered accountants. Mostly they were doing this, but now the company secretaries, the cost accountants and others can also enter into the domain of the valuation, and they people are doing this. So now we are not the only professionals, so we are having competition internally as well as externally. So, and we, the chartered accountants, are known for our knowledge, for our expertise, for our skill set. So if we are able to keep this up, we'll be surely be able to keep our flag flying high of the ICI. So today, with having a speaker like Sumit ji, so I am sure that it would be a great learning for the members, those who are already into the practice of insolvency and valuation. Undoubtedly, they knows very well that this is a great opportunity, but those who have missed the bus till now, there is nothing to be worried about. They can catch the another bus that is coming by, and Sumit ji will enlighten all of us today. So I'll not take much of the time of the participants. Straightway, I would request Sumit ji, but before that, I must congratulate all the members and wish you all a very happy learning. Over to you, Aditi ji. Thank you very much.
Thank you so much, sir, for the wonderful remark. Now let's move forward to the technical session 1, valuation and insolvency. Before that, one reminder to members. Please be sure to type your questions or queries into chat box. Valuation of asset is one of the core feature of the corporate insolvency resolution process under the Insolvency and Bankruptcy Code 2016. The IBC code is one-stop solution for resolving insolvencies, which previously was a long process that did not offer an economical viable arrangement. The code aims to protect the interest of small investors and make the process doing of business less cumbersome. For that, we have very dynamic and polite speaker, Mr. Sumit Dhadda among us. He is member of ICAI since 2003, secured AIR 25th and gold medal in CA inter exams. He has done DISA, risk management and course of certified concurrent auditor. He is also well known as certified anti-money laundering specialist. He has rich experience of 17 years in MNC audit, statutory audit, IND AS, valuation and risk management. A registered valuer and insolvency professional from Insolvency and Bankruptcy Board of India. He has worked with PwC and KPMG Bahrain in audit and assurance vertical. One of the wonderful faculties of GMCS and IBBI valuations courses across the India. Presently, he is managing partner of DLS and Associates LLP, having offices at Delhi, Jaipur, Bangalore, and Chandigarh. Now I request CA Sumit Dhadda to take the charge of the session. Thank you.
Thank you, Aditi. Warm introduction. My greetings to C. Vikasji, Regional Council Member and Management Committee of Vadodara branch. At this point of time, when we all need motivation, you yourselves keep yourself motivated by organizing seminars, and that too on a very technical topic, which is a need of the hour for all members of the profession. Before small background, I was born brought up in Jaipur. I did work in Delhi for some years. Then I worked in PwC Mumbai. I worked in Bahrain and Middle East. And 3 years back, I moved back to India. Once you're staying out of India for so long in a tax-free country, you cannot practice income tax back in India because you have never paid taxes for 10 years. So, out of your question. So, but when I came back to India to settle in India, I was wondering what practice should I start. And 2016 onwards is a period for professionals who can grab the opportunities. A drastic change happened in our scenarios. We got IBC passed in 2016. We got IND AS passed in 2016. And in 2017, valuation rules get framed. All these three opportunities are bigger opportunities that are interlinked for all professionals. Why we all need profession? What is the need for that? John Keynes has rightly said, because it is always better to be roughly right than precisely wrong. Your valuation always gives you a benchmark figure for any negotiation. Instead of going wrong, let's take a basis from any valuer and get a number. Just to give you in India, if we just take FDIs coming in India, it is 693 billion in last 20 years from April 2000 till June 2020. But if you see from last April 2014 till September, it is 319 billion. Almost half of the FDI came in last 5 years. And what does the FEMA regulation says? Whenever any money is coming in India, you need to get a valuation done from a chartered accountant. So it's a huge opportunity, which is still existing for us. We have 66,000 startup forms in last 5 years, and every startup mostly gets a funding. And whenever you get a funding, you need a valuation. As rightly mentioned by Vikasji, IBC has scaled up very high. And as of now, we all know IBC only covers companies and LLPs. Still, till last 3 years, we got 3,455 cases admitted, which is undergoing process of IBC. And IBC has a mandate that every case needs to appoint 2 valuers minimum. So there is opportunity for registered valuers in IBC. Nowadays, if you see, all MNC companies and especially ITs and startup companies give ESOPs a lot to their employees, and valuing ESOPs is also a huge opportunity. Rest Income Tax Companies Act, LLP, all have some statutory requirements. We need to get a valuation done. If we talk transactions wise, whether you do M&A, whether you do any inbound, outbound, any fundraising internally or externally, or you are selling your businesses, or any dispute resolution, arbitration, you need a valuation. The classic example is, if all you are aware, McDonald's case. So we all know McDonald's disputes. Promoters had a dispute between franchisee agreement India and UK, and the issue was on valuation. Later on, because of our Indian values, it got sorted out in UK arbitration court, and the issue resolved. So valuation is important at all places commercially. And if we talk of regulatory purpose, Companies Act is a mandate. Whenever you issue shares, you need to have a valuation done. You do a transfer, you do a private placement. We need income tax requires income tax has more opportunities. You either issue shares or you transfer shares. You need to do a valuation. Now, who does a valuation? That's a separate question, but at least valuation is required in some other form. SEBI has a mandate to get valuation done. RBI under FEMA regulations mandatory, whether you are doing inbound investments or you are doing outbound investments, valuation should be done by chartered accountants or merchant bankers. Insolvency and bankruptcy, mandatory, only registered valuers. And nowadays in all court litigations, whether be a commercial, civil or family matters, court is asking valuers from registered valuers to get a valuation of property done to decide alimony amounts. So valuation is always there. Since in old IGAP, which were applicable in India, which is current applicable also, we never used to have a concept of fair value. So everything was on cost. So valuation was never done and not thought of. But now since 2016 onwards, we got IND AS in India, which very essence is to have a fair value in the balance sheet, either in accounting form or in a disclosure form. So all IND AS companies comply with valuations. So there's a huge opportunity in IND AS, whether you do a plain accounting, ESOPs, purchase price allocations, or impairment testing. Specifically when this period in June, probably from May 20 to July 20, when everybody was at home, the busiest professionals, one of the busiest professionals were, apart from Corona warriors, were registered valuers, because all listed companies got their impairment testing done of IND AS 36, which was a mandatory, because in case where your economic external indicators predict that something might not go well in next year, you need to get impairment testing done. So it's a huge opportunity coming. But now we need to understand what is a bigger concern, what happened, and we cannot control what the regulator changes are doing, but we need to move accordingly. Now, the biggest jolt we got on 24th May 2018, when Income Tax Department removed the power of chartered accountant for issuing certificate under DCF method. Now, one of the fact we need to understand, before this, out of, if we assume 150,000 chartered accountants are in practice, for sure I know not more than 1,000 chartered in India would be in hardcore practice of valuation. So it was only 1,000 chartered who would be practicing, but this right was for 150,000 chartered accountants, and it was removed without giving any reason, any explanation, for any reason best known to the interest of government. Our ICA body written so much communication to them to let us know what is the reason that we have been removed. We are doing since 1961 in Income Tax Act, and now you allowed only merchant bankers to issue valuation certificate in income tax under DCF method. So this was power has gone away, and a lot of companies, startups issue under DCF method for shares. So this change has hit badly. So now we need to understand how things are moving and what should be the way forward. In Companies Act, Earlier it was all done by registered chartered accountants, but now from 1st February, only registered valuer can issue the report, whether it be a merger report, buyback report, preferential allotment, that has gone to registered valuers. SEBI recently in last month, earlier in SEBI there was a rule that whenever a merger happens of a listed entities, the merger scheme should have been a valuation report of a chartered accountant. Now on 3rd November, SEBI amended this regulation, and now it should be done by only registered valuers. So the opportunities are shrinking and moving to other sector if we don't upgrade ourselves on a timely basis. RBI started empanelment of registered valuers. Indian Banking Association is in discussion to make to issue an order to all banks to now mandatory empanel registered valuers for all their loans and other cases. Earlier, chartered accountants and engineers used to do it, but now it will be all under the ambit of RV. So now, if things are moving away, we need to also move to a bigger pie. We need to expand our horizons if we need to sustain in practice. And before starting with the session, I was having a discussion with Aditi, and I was saying our traditional practice will be enough for our bread and butter. But if we really need to eat desserts, we need to do something more than what is expected. So tax audit is mandatory. We all should be aware of that. But more than tax audit, we need to have some exotic services in our bouquet to get a better client service. So now from after all these changes, now we got a legalized valuation framework. Before 2016, before the IBC rules and before the valuation rules formally came, valuation was not formally recognized in India. There were no such laws which control valuation profession. Now, an attempt has been made by IBBI board to control the valuation profession by standardizing it, by issuing standards, and the first standard on valuations was issued by ICAI, our mother body. They have issued standards on valuations, which is applicable from 1st July 2018 to all chartered accountants. Now, whether you are a registered valuer or you are a chartered accountant, if you are doing a valuation, you need to comply with the standards. Earlier, there were no standards applicable. So whatever you do, that was fine. But now since there is a standard with us, so we need to follow the standards, and it is on as comparable to international standards. How the profession got evolved of valuation. So in 1968, first committee was formed of engineers, engineers to value land and buildings. There were no formal committee formed for financial assets. In 2003 onwards, corporate governance committees used to mention that we need to have some group of valuers because this profession is mostly dominated by CAs. But in CAs also there is no specific regulation which talks about valuation. So there were no standards. So they wanted another body to control. The Irani committee suggested. It took almost 7-8 years by ministry to start. Now the point to note here is the registered valuer rules, registered valuer section was approved in 2013 Companies Act. So in 2013, section 247 mandates that now whenever valuation needs to be done, it should be done by registered valuers. But when the rule came almost after 4 years in 2017, and we should be thankful to IBBI. Had the IBBI would not have pushed so hard, we would not have got rules in 2017 also, because IBBI chairman put a strong foot and say that if we do not issue the rules of registered valuer, my IBBI proceedings cannot succeed, because the very essence of IBC proceeding is we need to get a valuation done independently from two valuers to assign the value, so that the interesting buyer and bidder can take the company by knowing the value. So because of so much of push, it should have come. Now, one of the reasons why it took so long from 2013 to 2017, the rules get drafted. And as we know, earlier valuation was only dominated by only CA fraternity used to do valuations. Later on in 2013, when the rules started coming, all other institutes started approaching, all other our sister professional institute they started approaching ministry and say, you should also allow us the power to do valuation. It took too much to and fro between ministry and other institutes to say whether should we allow company secretaries, cost accountants to equally have the power to do valuations. Then MBAs was also involved. So it took almost 4 years ministry to finalize the rules. And now the rules came. And when it came, it was mandated that not only CAs, company secretaries, cost accountants, and anybody with MBA finance can also become a registered valuer. So the pie is getting shrinked, the scope, the number of participants are getting increasing. But having said that, even if there are so number of other participants, the first advantage we all have is any client will always prefer a chartered accountant who is a registered valuer for multiple reasons. It's not here, I'm not saying that because chartered may have a special knowledge. I assume all professionals have a similar knowledge. But the reason why clients prefer still CAs who are registered valuers, because in other laws, income tax, RBI, CA certificates are still valid. So you would like to appoint a consultant who is a valuer under the Companies Act and who is a chartered accountant whose certificate can simultaneously use in other provisions. From February 2019, IBBI made mandatory that in Companies Act, whenever valuation should happen, it should be by registered valuers. In insolvency, whenever valuation should happen, it should be only by registered valuers. As of November 20, 3,600 registered valuers across all the three asset classes have formed. So as of today morning, I checked the status from the IBBI website. We have 3,629 valuers. Securities and financial assets for which we are eligible are 1,382 only. Land and building 1871 and plant and machinery 376. As per Committee of Experts report of IBBI board, they expect this value number required in India is 2 lakh plus. That is their expectation. Assuming that this number is high, even if I give them 75% discount, still we need 50,000 valuers in India, including land and building, plant and machinery and others. So their assessment is we need at least 20,000 valuers from SFA in coming till 2025, considering the amount of work which will come to the profession. Currently, we have only few acts where registered valuers is required. Later on, we'll discuss that they are trying to increase the aura. Now we have, as of now, we have 14 registered valuer organizations, just like we have C Institute. In RVO, in valuation field, there are 14 institutes. Anybody can join any institute. And our ICRVO is one of the best RVOs. And I'm not saying this just because I am a member of ICRVO. I'm associated with 8 other RVOs. The kind of technical literature, the kind of materials, publication our ICRVO has produced, any fresher who is just new into valuation, if he goes through that, he will at least get a basic idea how to start running in the profession field. Because we all understand that valuation is new, it is just evolving. A lot of people do not have exposures, but we have enough literature that if you read those materials, you will at least get a start away. IBBI has specified 3 asset classes. One asset class of SFA, which we are mainly allowed to register. Plant and machinery and land and building, where generally electrical engineers and people who have BSc are registered. I'm skipping a name of one member. I'm not able to recall. I met him last year in Vadodara branch when I came for a valuation session. He is a chartered accountant and he has also registered himself in land and building and plant and machinery valuer because he have obtained other qualifications. So it's not only that CA cannot register in land and building and plant and machinery. If you have done BSc and other at the time of your graduation, you can still register that. And it is the most advantage if you can register in more than one category, because then you can serve client much better. Anybody who pursues to become a registered valuer in future, you need to join any RVO. There are 14 RVOs available. All RVOs have same recognition by IBBI. my personal preference would be always go with ICA RVO for the simple reason the kind of learning management system they have developed is one of the best available in India. You need to complete a 50 hours training. So in case of insolvency, you clear the exam first, and after clearing the exam, you need to do a 50 hours training. But in case of valuation, you need to do 50 hours training first, and after that, you need to give an MCQ exam. And MCQ exam are easy to pass because if we can pass CA final exam, then any other exam is not tough as compared to CA degree. Now, what is the problem happened with the coming of rules? Now, earlier it was everybody knows that whenever you need a valuation, just take a CA certificate and it will be compliant in all other laws, which was very easy for client also. But after coming the rules, too much chaos has happened in the fraternity. For Companies Act, I only need registered value rules. For Income Tax Act, I need merchant banker certificate if we are issuing on income approach. For FEMA, I need a CA or merchant banker certificate. So for one transaction, if I ask a client to give 3 different certificates from other consultants, he may not prefer it, and it is not ease of doing business. Currently, this is the situation. There is too much overlapping. If we see just few acts where we do valuations, so if you are issuing equity shares in Companies Act, you need a registered value certificate. For the same transaction in Income Tax Act, if you are doing under DCF, you need a merchant banker. If you are using a book value approach, you need a chartered accountant certificate. And if you're using FEMA, you need either a merchant or chartered accountant certificate. So try to put yourself into client shoes and see how difficult it is for one transaction. You are getting 2 different or 2 or 3 certificates, which is not, it is not a cost effective. It causes pain to client also, and it is duplication of efforts. In right issues, you don't need a certificate under Companies Act, but in Income Tax Act, you need from CAs and merchant bankers. If you are issuing other equities than equity, you are issuing other securities, CCPS, debentures, then again the same requirement happens. Luckily, in case of transfer of shares, we don't need a certificate under Companies Act, but in case of income tax, again we need it. But nowadays, a lot of MNCs get a certificate voluntary from registered valuers for transfer to avoid any litigation later on. In ESOPs, again, at the time of starting, you need a registered valuer certificate. At the time of exercise, you need a merchant banker certificate. A good thing has started happening. SEBI of late started recognizing registered valuer certificates. So recently, 2 real estate investment trusts were launched on the SEBI platform, where they made registered valuer certificate mandatory. And now merger schemes also, they made registered valuer mandatory. Now what is happening, we need to put from the client shoes. So in a summary, if you put what is happening, in Companies Act, only registered valuers. In IBC, only registered valuers. And for each case, minimum 2 valuers are required. SEBI, mostly CAs, merchant bankers, and only in merger schemes, we got RVs. As of now, in income tax and RBI, only CA and merchant bankers. So practically, we CAs have upper hand in all valuations because of our same support required in all other acts. And if we have little bit inclination towards this profession, this valuation practice, it is a time to take this valuation degree now, because the department MCA is under a process to change the course. They are in the process to make a new body, National Institute of Valuers, which we'll discuss shortly. So starting point, we all should be 247 section, which is the mother of this in Companies Act, which says any valuation which is required in Companies Act should be done by registered valuers. Now with this, Valuation Rules 2017 came, and it has huge implications, a huge code of conduct on members. In Companies Act, they have specified the minimum sections where at least they need registered value certificates. Majority of the assignments generally members get is for further issue of shares, because since the amount of FDI is coming in India, majority of shares are being issued. So a lot of money is coming in India, and a lot of assignments are there on further issue of shares, preferential basis, or private allotment. Mergers, minority shareholding, where a lot of was earlier done by our members, now it is all by registered valuers. And now you will see, due to increase in cost of compliance in Companies Act, 2019 and 2020 have witnessed a lot of mergers and amalgamation among family companies. Earlier it used to happen, everyone used to open so many different private limited companies to keep separate businesses. But now businesses have realized that opening various companies is not so much tax effective, and the cost of compliance is increasing day by day. So a lot of mergers and amalgamations are happening. Those who are following IND AS, if you have IND AS clients, it's a huge opportunity in IND AS. Every year, fair valuation is required. Whenever you do a merger, acquisition, business combinations, if you have intangible assets, you need to do a valuation. Mostly in case of plants, generally every year you do impairment testing if there is a evidences to show that something has impaired. So it's a huge opportunity. And in IBC, as we discussed earlier, it is 2 registered valuers, and now it is only companies and LLP. Very soon, government is in the process to start valuation IBC for sole proprietorships and partnership firms. When these entities are also included, the kind of valuations opportunity will be there. It is huge. So DRT and all others will include registered valuers. And one of the rule in IBC is, whenever there is a difference between two values and it's a significant difference, you appoint third valuer. So opportunities are there huge in valuations, at least in the coming years. Is valuation difficult? Valuation is the most simplest profession. It's just applied of common sense. Worldwide, we have 3 approaches. Anywhere in the world you go, valuation is done only on 3 approaches. And it is acronym is CAL, AJKAL. That means worldwide, wherever you do valuation, approaches are cost approach, market approach, and income approach. CAL signifies whatever have you incurred yesterday in the past. That is the base valuation. What is the market available today? Can you what the value you can get today? That is a market approach. And income approach is whatever you can get in future. Since the approaches are common worldwide, I know a lot of firms in Ahmedabad, Mumbai, Hyderabad, they are doing a lot of outsourcing of valuation assignments of global companies in India, UK, USA, Canada. Their valuations are being performed in India, especially Ahmedabad, Mumbai, and Hyderabad cities, because approaches are same. And once you understand nuances of valuation, it is very easy to replicate work, because generally they have standard valuations as per their income tax of IRS of US or Canada. So it's a huge opportunity. We need to think that if we really need to remain in the profession long, apart from our traditional practice, we need to have this feature in our firm. If I cannot do valuation, my network partners, my network firm, somebody in my firm should have this, so that whenever a client comes to us, we can serve him properly and he should not go to anywhere else. Now here, as I mentioned in Companies Act, we have only one section, section 247, who talks about registered valuer. Now the journey has taken on a very fast pace, and the government is taking more efforts on that. So in 2017, in 2013, you had only one section in Companies Act. In 2017, you started valuation rules. Now in 2020, so in April 2020, MCA issued a draft values bill. So a whole act has been drafted to recognize the profession of valuation. And the best part of this draft bill is, in the bill, they have the preamble, they have said it would be the duty of the committee of the valuation, National Institute of Valuers, to ensure that at least 14 acts prevalent in India should use a common valuer. This will be good for registered valuers also. This will be good for client also. It will be a win-win situation for everyone, because for the same assignment, same valuation, your report can be used in multiple places. And the kind of department, the kind of acts they have put, all acts they have put: banking, income tax, SURFACI, FEMA, SEBI, black money, LLP. Coincidentally, they forgot to include GST Act under this valuation. So as of now, government is planning 14 acts, but GST was not included. This was highlighted to the ministry that you should also include GST, because in GST at certain critical transactions you might need a valuation services. So MCA as of now did not introduce GST Act in it, but they made the GST committee chairman as a member of the advisory committee of valuations. So of late, we are all hopeful that GST will also include valuations from registered valuers. Now you can imagine, as of now, only Companies Act and IBC is giving so much opportunity to members in valuation fraternity. When these 14 acts comes, and especially in income tax, and we all know how much buy and sale of unquoted equities happen in income tax act. So the kind of work and volume which we can think to come in future would be huge. So it's the right time members to think and upgrade ourselves. I still remember uh, whenever we were doing CA, somebody just said, "Ek bar just you do a CA, then life will be settled. Then you don't need to worry at all. Then you don't need to put any efforts at all." Then I realized how I was befooled. You cannot relax once you become CA. Every year, every moment, you need to upgrade, because the dynamics are changing. And if you do not change, you will be far behind. Because whenever I go to take valuation sessions, I'm very thrilled to see 65-year-old member, 70-year-old members attending the class full time and with dedication, and they're also clearing it. It's not that they're just sitting for the sake of getting a certificate of 50 hours. They're also clearing it. So at every stage, we need to upgrade ourselves. Now, having said that, what are the key issues in valuations? I'll not take much time because I think we are almost at the closure time. The biggest issue in valuation is biasness in valuation. And Professor Ashwath Damodaran, who is known as a dean of valuation, has made a very classic comment on biasness. He says, "You tell me who paid the fees of valuation, and I can tell you how much biasness has come into the valuation." And how true it is. If a buyer has appointed you to do a valuation, subconsciously you will give a lower value to that asset. And if a seller has appointed you for the same asset valuation, subconsciously you will give a higher value. The only reason is because indirectly your interest is linked with the person who is paying you the fees. And it is very difficult to remove this bias. And even I am personally aware of the fact, since I do a lot of IBC valuations. So subconsciously, I'm forced to at times take a negative approach because the company is under IBC. So let me give you a lower value, but which is not the right approach. I'm trying to overcome it slowly, but it is the biggest problem in valuations and the biasness. Second most important is uncertainties. We don't know how the market reacts, how the economics reacts. Presenting a projection is something different, but knowing the estimates are something different. Take a classic example of Tata Nano valuation, and with due regards to Tata products or any product, I'm trying to understand the concept and valuation. When the projection would have been started, the people would have given the team of the marketing team who are estimating the sales of Tata Nano would have budgeted that we have 100 crore customers in India, population in India. Out of 100 crores, at least even 1% will buy. That is, 1 crore people will buy our cars, which is a very low cost model. It will be a huge success for us. The number looks very good in paper, but what happens practically, we know what happens. So people did not buy the car, not because they cannot afford, just because they thought car is a luxury product and anything coming in less than a lakh rupees is not worth calling car. So it's a psychological issue. So you make some projections, but how the economics behave is a huge different story. Nowadays, valuation has become a black box model. Members rely more on model than their skills. They just everything dump in the Excel and expect the model. I'll 2 minutes. The most important, everything encounter, everything you can always argue. I can always argue on biasness. If I had done something mistake, I can argue on information overload. I can argue on uncertainties. But one thing which I can never argue in front of a regulator, if I did a mistake, that's the last one. Human error in punching data. If I did mistake data, I cannot argue that this is fine. This is a classic example of one of the reports from a very big firm in India. It was caught by income tax department because a small mistake happened. What the mistake has happened in the valuation? A punching error happened. Instead of sign minus, it should not. Instead of adding, subtracting it, the formula which was put, it minus minus made add, and the value got increased instead of reducing the value. So what happened was 42 crore penalty was levied, overvaluation was done, and the department put a huge penalty on the client. So you cannot argue that my article punched the numbers, so I missed it. So error in punching data cannot be avoided at all. In the end, I would like to convey on price is what you pay and value is what you get. So as a valuers, we need to get a value, and this course itself is a huge valuation course, huge. And nowadays, people know the price of everything and value of nothing. We need to know this is a time now to upgrade. If we do not upgrade now, we will not have a value. And if we need to remain in the profession for long, we need to constantly acquire new values to upgrade. With this, I hand over to Aditi or presenters. If you have any questions, I'll be happy to answer whatever little knowledge I have.
Thank you, sir. Thank you so much for your depth and quick overview on this subject. This will definitely assist and motivate us in a traditional routine practice. The mementos to the dignitaries will be delivered to them. Now I would like to request Treasurer of Vadodara branch, CA Rikin Patel, to extend special vote of thanks.
So on behalf of WRC and on behalf of Vadodara branch of WRC of ICI, I thank Sir for sparing his valuable time and such an excellent session on valuation. I'm sure, Sir, it would upgrade the knowledge base of everyone in this session. Thank you so much.
Thank you, sir. Thank you all.
Yes, sir.
Sumit sir, okay sir, thank you. Rikin sir, thank you, bye.
Thank you.
रिकिन सर ये सेशन खत्म हो गया ना, अभी दूसरा लिंक ना?
ये सेशन खत्म है, नॉर्मल वाले पे।
हाँ ठीक है, हम लोग बंद करते हैं। हाँ ठीक है,
ओके सर।